Good morning, good afternoon, good evening, traders from across the globe. I'm the Short-Term Trading Live with Oscar. All right, traders, it is Friday. Finally, we're at Friday. It's been a rough and tumble week, but if you traders who have been at my site with your dukes up, you know we survived this week and did pretty well. We have Friday, September 12th, 2008. And we're looking at a green Omni, traders, on a Friday. A green Omni, I know, but I gotta go with what I see. It doesn't matter what I think. I know it's Friday in a bear market, but what I see are indicators pointing towards the upside. I see an outside reversal pointing towards the upside. I see the last bunch of Fridays we settled higher towards the upside on a Friday. Why? Who knows why? Who cares why? We're here to get it right. While we're trading it as day traders, it doesn't matter why. As long as it comes up technically, we don't question it. I'm going to show you a couple of charts in a few moments to illustrate exactly that. But keep this in mind, traders, right here. This is what's called an outside bar. It's an outside reversal day. When the market starts dropping lower and lower, and then finally you have a big down day, the market turns around that day, rallies and settles by the highs. That is considered an outside reversal day up and usually carries with it at least 2 days up movement. So you have your outside reversal. Tomorrow's only Friday, or I should say today for this video is Friday. We're only looking for 1 day run up, right? So we have that, coupled with a lot of indicators which have turned, which I'll show you in a moment, pointing towards the upside, and the fact that with the exception of one Friday, which was the Friday right before this last holiday, and you can expect something to be different on that Friday, right? It was the Friday leading into a 3-day weekend. That Friday we went down. But a bunch of Fridays before that, we went up. Last Friday we went up. I think tomorrow with the indicators and the outside reversal put it on Thursday, we're going to go up. So with that in mind, I'm going to take you to some charts right now to show you what I'm talking about, and then we'll discuss how to capture that Omni by looking at the trade recommendation we have planned for you. All right, traders, let's go look at the charts. I'll come right back to you. Okay, traders, you are looking at the S&P December daily bar. Remember that we did roll over from U September to Z December. No longer will you be trading SEP. You are now trading Ds. Keep that in mind. All right, traders. What you are looking at is the fact that outside reversal up days were posted in many of the U.S. index stock market indices. So with that in mind, you can see clearly right here, this illustration is an outside day which settled all the way up here. So it's an outside day which settled higher, making it an outside day up. Now, if that was my only reason for getting bullish on a Friday in a bear market, I'd abandon ship on that idea. But let's look at a couple of other things here that may convince you that tomorrow, September 12th, on a Friday, we may actually get a rally out of this S&P. Let's look at the next chart. Okay, traders, when I was referring to Fridays, for whatever reason, have been closing higher lately, take a look at these red arrows. This is, again, the December daily S&P bar chart. 1, 2, 3, 4, 5, 6, 7, 8 Fridays in a row. 6 of those Fridays settled higher, 1 settled lower, but it was the Friday leading up to the 3-day weekend holiday. So that was a little different. Last Friday rallied, and will we rally tomorrow? There's the question mark. Well, now we have 2 reasons, right? We have the outside reversal day giving us the buy signal. We have all these Fridays, for whatever reason, they seem to settle higher. Tomorrow, or today for this video, I should say, is Friday. So that's reason number 2, right? Let's go look at a few more charts now and see if we can shore this up a little bit. Okay, traders, we are now looking at the Dow Jones Transportation Average, which is the leader of the U.S. stock indices. This has a very constructive look to it. Look at that nice fat run we had on Thursday. Looking nice, bounced off of this bottom of the apex that's forming. Now running towards the top. Why not give a shot to run up here and see if we can hit that? So now you have the leader looking strong in its chart formation. You have all those Fridays settling higher on that S&P chart. You have the outside up reversal. Now let's go look at the indicators of the Dow Jones Transportation Average and see if they don't agree with an upside move for Friday. Let's see what we get here. Okay, traders, pretty simple picture so far. Now we're going to look at some indicators, slightly more complicated, but these are very simple illustrations. This is the Dow Jones Transportation Average daily indicators, and this is the commodity channel index, and clearly you can see you have that little W formation down there. The blue line crossed over the red line. It's heading upwards. That is a bullish look on the commodity channel index. Just below that you have RSI, or relative strength index, another little bullish look there. You see that little hook right here towards the upside. Now below that, we are looking at the WADX, average directional movement indicator. You have the green, which is the positive, crossing and heading towards the upside, crossing over the red, which is now heading down, green heading up, red heading down, another bullish signal. So that's three indicators in the Dow Jones Transportation daily chart pointing towards the upside. The chart itself looks bullish, which is the leader of indices. The S&P looks bullish. You have all those Fridays settling higher and the outside reversal. So far, so good, in my opinion, as far as using analysis to call direction. Let's look at a few more indicators now, just to make sure we look at many indicators and not just a few. Okay, traders, staying with that chart, which is the Dow Jones Transportation Average daily bar chart. You are now looking at slow stochastics, and they have also pointed towards an upward move for tomorrow. Right here you have MACD, moving average, convergence, divergence, and that is pointing towards the upside. Then you have your Williams %R indicator, and once again pointing towards the upside. 6 indicators. There are actually about 5 more I have found for the transportation average, all pointing towards an upward move on Friday. I think we have enough reason here technically to look for some upside movement. Of course, if it turns around and craps out tomorrow, we'll do something about that. But for now, at the Emini Trading Academy, which is www.livewithoscar.com, we're looking for, at least on the onset, some upward movement in the indice markets here in the U.S. Let's see what we get, traders. As always, do your own homework. Don't ever take anybody's recommendation. Don't take anyone's opinion until you've done your own homework and decide for yourself if they are calling the proper direction that agrees with you. So, you see the charts, traders? You see that? There's a technical reason and that sound analysis to think, hey, maybe we can give the upside a little peck on the cheek for tomorrow. Now, traders, you know I am of the mode of don't fall in love with the upside, but you know what? A little peck on the cheek tomorrow, and I think that might actually work for us here. Don't fall in love. Don't start making out with the thing or anything. Just give it a little peck on the cheek and then run for cover. So we'll see what's going to happen tomorrow. You know, before I get into the Omni, let me just give a shout out to a bunch of fans who have been calling in and coming to the site. Hello, Holland. A shout out to you fans in Holland. You know, I don't know if it's the dance I do right. I'm not sure exactly what it is. Maybe it's my wooden shoes, but they seem to like what I got. So thank you so much for showing up, you traders from Holland. All right. Now, listen, traders, earn while you learn. We have trading contests that take place at the site weekly. You can earn cash prizes. If you're a gold member of our site, you win cash prizes if you win the contest. The contest is free. Starts out with $10,000 simulated accounts. You can trade every day of the week. And on Friday, we tally up the winners. Cash prizes are given out. If you are less than a gold member, you can win Omnibucks. And if you win Omnibucks, you cash them in and become a gold member for a week. And as a gold member, you can go back into the contest and win cash prizes. So come on, traders, earn as you learn here. We are trying to help you in every way we can. Come to the site, click the link to join the contest, give us a call, make sure you sign up, and we'd be happy to help you out. We'll help you trade, and we'll certainly teach you, as we always do here at the Omni Trading Academy. All right, guys, is that okay? Did I tell them everything we need to tell them about the contest? We're good? All right, so let's go to work. All right, traders, the S&P Again, this is Friday, September 12th, 2008. The S&P has rolled over. Again, traders, roll over. We are out of the September contract and we are in December. Don't trade September any longer. That's in currencies, indices. Everything now is December. That was September of the financials. So trade your Decembers. With that in mind, the S&P Emini ESZ8, the December contract, Omni says to buy in the mid to low 1240s. We are trading 1249 as we shoot this video. Traders, get your orders in. You're buying the mid to low 1240s. Put your stops in. Put them in when? First. Put them in. That's right, baby. Put them in first, before, pre, whatever it takes to be before you place your order. Put your stop in first. Then see if you can buy this thing in the mid to low 1240s. Omni's profit objective is a nice run up into the 1270s. Little bit of resistance around the 64.56 area on the way up. But it looks like if this gains a little bit of strength in the morning and gains some legs, this thing's going to go. So be ready for it. Of course, your stop will be in case we're wrong, traders. That is using proper risk management techniques. Risk management will keep you in this business for a long time, but you need to respect the margins, you need to respect the huge leverage in trading commodities, and you need to respect these markets by putting in your stops. Don't ever think you're bigger than these markets. They can hurt anybody. So get your stops in, try to buy this thing in the 40s, look to see the 1270s, keep your powder dry. If you don't get your fill, sit tight, sit on your hands, do what you got to do. Always come up with a trading plan. Trade that plan the next day. Plan a trade. Trade the plan. I do it every day. In fact, traders, I write my plan down and I show it to the camera every evening for the next day. And in the morning, I hold it back up and we act out that plan every day without deviation. If you do the same, I assure you it will help. Okay, traders, I hope these videos are helping you. I hope tomorrow's trade works. I hope the analysis we just showed you can help you get in focus with what's going on out there. All right, traders, we left you off last week with the weekend webinar, which was actually a continuation on September 6th, was a continuation from August 5th's video. We talked about a big fundamental shift, currencies down, energies down, metals down, grains down, dollar index up. And it could give us capitulation in the stock market and then turn us up higher. Traders, so far, you go back and watch that video, so far so good on every one of those fronts. The currencies have just been getting annihilated. This weekend, we may actually continue with that and keep the story going forward so that we all stay in focus of the larger picture. I'll decide what I want to do for the weekend webinar. You may very well see a continuation of that flow. Always keep the big picture in mind, traders. I call it looking at the forest from the trees. If you're up above the forest, you can clearly see what direction the forest goes in. If there's a path, you can clearly see the path when you're looking from above. Then when you're day trading, you're in the thick of those trees and you're trying to get your way around them and figure out which way to go. But if you've kept the path in mind and what direction it's going in, it makes it a lot easier to travel that path. So keep the big picture in mind at all times. And with day traders, you trade the trees, but you watch the forest. All right, traders, that's about all I'm going to give you in this video. Phone number is 702-629-4755. As always, please keep those emails coming in to oscar@futuresanalysts.com. Okay, traders, it's Friday. I will be at the site. You will see me on camera live. Make sure you come on down to the site. Again, if you didn't catch the URL, it's www.livewithoscar.com. All right, traders, keep your emotions out of trading at all times. One of the best things I can do to help you with that is to tell you to say this to yourselves every morning, afternoon, and evening, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.